All right, so Habe, I'm excited to dive in with you. Why don't we kick this conversation off? You can maybe start by telling me what's the mission with Rails. What did you guys set out to do when you started the company initially?
So if I look, what's our ultimate goal? Um, we want to build the largest universal single source of truth on all things commercial businesses. If you're a research company and want to have access to an understanding on how medium and small businesses are doing, what their operational data is on a specific cohort, you should be able to do so. If you're a product company and you want to understand a market better, you should be able to go to Rails and get that. If you are in the conventional default financial ecosystem across various domains, whether it's lending or cash management or ACH or whatever the case is, and you have to touch the business data, which is solid in multiple repositories, you should be able to get that from Rails. So really building the largest financial data network on businesses. And I can go to Lens and say, we will rival the Googles and Facebooks of the world when it comes to business data set. So we're giving businesses a persona. What does a business looks like, and how do you understand that? So that's what we're building.
Yeah, let's break that down a little bit. That's definitely ambitious to have the goal be the largest. What does it mean? What does business data mean in context here? What would be an example, maybe?
Yeah, so businesses have multiple streams coming in from their operational side. A lot of outsiders think that banking data is a single source of truth when it's not right. Businesses have multiple bank accounts. Sometimes their purchase or sales data sits in billing systems. Sometimes it sits in e-commerce systems or point of sale systems. Then you have businesses who are 5 years into their running and they have filed taxes with IRS. They might owe them some money, they might not. Gives you some picture there as well. Then there are businesses who have people working for them, so which means that data resides in HR payroll side. So business as an entity is quite complex and complicated versus on the retail side of the banking. Whereas you or me, banks or anybody who wants to understand about me can actually have a look at my bank statements and can get a good understanding of me, my spending habits. That's why Equifax and CrossCheck credit scores are good. But businesses are much more complicated, and that data is all over the place in different silos. So our mission is to reconcile that into uniform, universal source.
So this would be, I would imagine, a big part of it is payments. So where companies spend money. Are there other major categories, where they, I guess there's almost an infinite ways to draw a circle around data. You could say all the employees, all the data about the employees, everything the employees do, everything about the product or the services. But certainly how the company spends money is a major category that's probably easier to capture. Are there other big categories that you think about capturing?
So we don't just think about categories because every business is unique. What we think about is where all this data is flowing to. Like all rivers will ultimately flow into an ocean one day. All this data, which is in different data sets, flows into accounting systems. Whether POS or tax or other data sets that I mentioned, the single repository is always the accounting system. Now, the problem with the accounting system is they're highly customizable. They are kept by bookkeepers or accountants, or in some cases, the business owners and the entrepreneurs. And you and I both know when there is a human input, that is prone to error, that is prone to other questionable things. So the question then arises, how do we pull this data, reconcile it, but more so, how do we make it more dependable? How do we increase the fidelity of this data? How do we create this data in a complete, accurate, wholesome manner so people can use and rely and depend on it? So it's not just the payments data or the HR payroll data is what we're after. What we're after is the single source of flow in, and how do we create a 360 holistic picture on the business? Because AR and AP changes in a business really fast on a daily basis. Employee churn is fast nowadays. We've seen with pandemic, hiring and attrition of employees is fast. Doesn't show up in the banking system typically till the money exchanges hands, and so on and so forth. So it's not just one data set that we're after. We're after the full picture of it, and how do we make sense of it?
Got it. And an example of who would be interested in this. Do you think of it as the businesses themselves, or other maybe credit vendors or some outside companies would have a use for this? Is there businesses at a certain size that, or a sweet spot in the market that, as opposed to just everybody? I'm curious.
If you start to segment the businesses, the SME world, think of the Main Street businesses primarily. Businesses which are, under 10 employees, under $10 million kind of stuff. They typically rely on outsourcing their finance and their accounting, which means that they always have to ping someone and say, hey, how's Outlook? I want to apply for a loan, or I want to get something. Can I get some statements and really understand if we qualify or not? Which means that business owners and entrepreneurs are having this disconnect between how the full picture of the business is versus what the perceived picture of the business is. So businesses are definitely interested in understanding their whole 360. Now, Railz does not provide that directly to the businesses. We do partner up with banks. We do partner up with other institutions and fintechs who are creating these dashboards so businesses can have access to that for their own monitoring. Then there are banks who want to understand the businesses better, when they're underwriting a loan. Cash management systems are another source of expense that are trying to help businesses manage themselves better. Then there's the world of ACH payments. When you write a check to your gardener, it's digital on your side, but literally a check is printed and mailed, and then goes to an accountant who's actually receiving hundreds of these checks, and then they have to do reconciliation. And that reconciliation gets pushed back from banking to the accounting systems. That takes a very long time, 7 to 14 days. So because Railz is a bi-directional system, can push and pull into these system of records, we can actually streamline the whole ACH process from 7 days into a couple of minutes, and help the whole supply chain. So at the end of the day, we're data as a company. We don't gun-hole specific use cases and say, hey, only you, and you can use it. What we're a big fan of is we're targeting the developer, the builders, and giving them access to this data, which historically they didn't have access to. Or if they had access to it, was in semi-structured or unstructured data sets, for which they had to make sense of or normalize it in a way that they can depend on it. So Railz exists to increase the fidelity of this data set and normalize it in a way that developers and builders can use and start building the same day. And because we're targeting the builder community, you start to see use cases that we wouldn't have imagined. So we're not gun-holing anybody into, hey, who can and can't use it, but we get to see new use cases on a daily basis, whether it's across fintechs, whether it's across product companies or research companies who are just needing access to this data.
So you probably think about progress or traction on your side as both the number of companies who are integrating their data set into your database, your API, and then the number of developers who are building on top of your API that are accessing that data?
Absolutely. So two KPIs is number of users or companies, and second KPI is usage of our API.
Got it. Usage. And the usage would be determined by the company. So the company, a user experience for the company would be they say, okay, let's use this Rails tool. They sign up, they connect to their QuickBooks or their Xero or their accounting software. They connect to their Gusto or their ADP, whatever HR software. Maybe there's other softwares they connect to, but they link this up. And then once they're plugged in, then they have the option to add on different apps. Is that right? Or is it more so then developers can, is there an app marketplace, or is that, yeah, tell me what you think.
So there's no app marketplace. It's just a single one-to-many API. Mm-hmm. So developers will use Rails to connect to accounting systems, QuickBooks and Xero's of the world, through Rails as a conduit. Rails will pull that data, and then what we will do is we'll cross-reference it with the banking data, with the payroll data, with other repositories to complete it. A method we call normalizing the data set. Once we normalize the data set, then developers can just ping Rails API and pull that out on each business. So the way we track usage is if company A connects 10 businesses, or 100 businesses, or 1,000 businesses. So every new business node which is added through a company who's using Rails API is an incremental increase in the usage of our API. And every new company coming on board to use our API is another track that we want to monitor. So number of companies that are using us and number of businesses connected through those companies is what we want to monitor.
Number of businesses using it and the number of companies connected to those businesses. So I understand the accounting portion, but just for myself and people listening, the other side, people that are accessing the data API, when you say one-to-many, what would be an example of the other side? So if you have a small business that integrates their accounting, their QuickBooks, all those sides, what would be an example of the other side?
Yeah, so when you pull accounting data, like I said, accounting is a manual input. There's a lot of human interaction with it. If a business says and claims that, hey, we have $1 million in revenue, how do we validate that there really is $1 million in revenue? Which means that we need to pull in banking transactions to understand that. How do we monitor industry trends or set early warnings for potential covenant breaches across the board? Which means that we need to fill in the blanks from other data sources to do sanity checks within the accounting data. How do we understand employee and payroll distribution, or history of employee churn? Maybe payroll benchmarking needs to be done, or labor market trends. It needs to be augmented within the data that we're getting out of the accounting system. Then we need to go and refer back to our HR payroll partner to augment that data set, right? So the idea is every single domain that this data is flowing into the business, whether it's flowing in from POS or e-commerce systems or billing systems or HR systems or banking systems, it's all being recorded in the accounting system if it's automatically connected. Sometimes there's manual input into it. The idea is, how do we make this data set complete and wholesome? And more so, how do we create it to a point where it's dependable? So developers don't have to go and connect 5 different source systems and say, hey, I want to connect with HR system and then payroll system and X system and Y system. And then they pull it in, and then they have to do all the data work on it or the cleansing work on it, and then make sense on it. We skip all of that. We save you the trouble. We save you the hassle. Say, plug into our source system of accounting. All transactions are there. And what we will do is we'll augment it with other systems. So, but because we're not resellers of all other data sources, but what we want to do is we want to achieve a very high standard of fidelity of this data. So, question about whatever goes into accounting systems from human input is whatever going to comes out, right? There's no sanity checks on it. Rails is the sanity check at the end of the day.
I'm with you. I got it. That's a good explanation. It is a complex business, technically, and probably logistically too. How did you come up with this concept? I mean, it's ambitious. I think of it similar to, I'm sure you know the more companies in the space, but one that comes to mind is Segment, where I'm not even sure if they're independently owned anymore, but back in the day, I used to use them to basically input, output everything. You know, you can connect your business analytics and all this. And maybe that's an indirect or direct competitor, but they're one that comes to mind where I understand the concept of it. And it's kind of, it's almost, I think of it as the second layer of business tools. Like the first layer is just tools themselves. You know, QuickBooks is better than paper accounting. HR on Gusto is better than ADP or paper. And as that happened over the last 10 years, now everyone's using all these different systems. And then you're the next layer on top of that, you know, connecting all the systems together so that it's all integrated and easily, efficiently flowing information.
You got it right.
Yeah.
So very similar to what Segment is doing in the space, but we're not a competitor to them. I think Twilio now owns Segment.
Okay, that's right. That's right.
As far as I remember. We're strictly staying in the operational financial data space, right? If you're a business, for example, and you have a Twitter account or an Instagram account or other marketing type trends account where you're monitoring your user behavior, you're marketing to them, et cetera, et cetera, et cetera. We're not interested in your user base or cohort. What we're interested in, how much money are you spending on marketing? Mm-hmm. You know, what's the operational expense on that? What's the return on that? So for that is all recorded back into some sort of a transactional source system where you're paying the expenses or doing reconciliation, where we can say, hey, business X spend X amount on marketing. That's all we're interested about. We're not interested about how many users you acquired after spending $1,000 into it. So what we're interested in, how much money did you make after you acquired this $1,000? So that's going to be recorded somewhere in the system as well. Your income probably. So really around operational financial data as single source of truth. How I came up with the idea, I wasn't looking for it. I wasn't thinking every day, hey, by the way, businesses have 10 different systems. They're all disparate sets and they're all disjointed and someone needs to just join them. It was when I was working at my last company, PartnerStack. They're one of the largest accounts is Intuit. And I was tasked to build a white label marketplace for distribution of software. TurboTaxes and others, they're distributed through partners and vendors and system integrators and referral systems and so on and so forth. So I was exploring provisioning APIs to see if we can do better provisioning within the source system. And PartnerStack was actually working with the Intuit team on that project. So I talked to different players within that ecosystem, CRM companies who would want a billing system or a bill attached from a customer to be pushed into an accounting system, or other companies who are in that ecosystem. So when I started to talk to them, everybody started to say, hey, we need access to accounting data. We don't really care about the provisioning side. And the question always was, Intuit has one of the best publicly available APIs for you to connect and start to pull that data. What is it that you really need? And the more I talked to companies, it became obvious that it wasn't just the data set that they're after. It was complete, accurate, and truthful data set that they were after. How do you have a high fidelity data set? Something that we call normalization at Railz. The reality is, if you are looking at, for example, accumulated depreciation as a line item, we want to understand if it's, of course, it's under asset class. But if the accountant just went in and left it at that level, the developer wants to understand if it's a current asset or a non-current asset. The developer wants to understand if it's tied back to the balance sheet or not. The whole line of visibility is completely missing. It's not that Intuit doesn't offer you that. The idea or the workflow is accountants and bookkeepers are putting that information. they don't take the leisure or liberty to actually index it properly across the board within the system that's available in the accounting system, which means that you will start to get unstructured or semi-structured data sets. And then you as a developer has to make sense of it, which means that you might have to go and get help from your data science colleague or a data engineering colleague to do that. So cleaning that was a big problem. Also, augmenting it was a big problem. Now, Intuit has 5 million businesses. Imagine taking each line item across thousands of transactions in one business and then increasing it by a magnitude of 5 million. And once you want to go outside of the Intuit ecosystem into other ecosystems, there are 30 million businesses. Now you just increase it by a magnitude of 30 million businesses. There are 50 million solopreneurs out there which are using Intuit, self-employed or FreshBooks. You added another 50 million people to it who are not keeping their system of records on a daily basis. It's an insanely disjointed, complex data set to solve the problem. But it's a data set which is highly dependable and gives you a complete picture. So someone has to come in and clean. So I always give an example of that. What we have at hand is crude oil. It's a lot out there. What we don't have is a refinery to refine that crude oil, right? So Railz is that refinery to refine all that data set, but we're also the gas station. So you can also fill up using
Got it. Analogy overload, but I'm with you. I'm just kidding. Let me ask you this. So you're at your last company. You recognize this problem, or at least the people talking about this problem. Do you go home and like dive into Terminal and open up a text editor and just dive into QuickBooks API, or like how do you literally get started on this? Was there a friend of yours on the software side, or you were on the product side, or what were those early days like? Because this product is so intimidating on some level, right? Managing all this data feed of very important information for businesses is like, oh man, just thinking about how people put data into the machine and into the accounting system and what they get out and the confusion there. There's so many edge cases. What was it like? Yeah.
Absolutely. I think the aha moment for me was when I found out that Intuit themselves do not use their accounting data to underwrite loans, which they offer to small businesses. And that was like, why is that? And the answer was because fidelity, normalization, completeness is missing from this data. And that's why they go to the banking data, which is like a recorded transaction, nobody can manipulate it, and you can depend on it. But we know there are limitations to banking data. There are multiple bank accounts. AR/AP doesn't show up in bank accounts till the transaction exchange hands and so on and so forth. So I started looking at the space. I came across other Intuit products like Connect, and it just went down the rabbit hole on Hacker News, where people were talking about it, discussing it, telling the world that why isn't everybody else opening up this data set? Why isn't everybody cleaning it? We have to spend time to clean it. It just takes resources. I knew this is a big problem and someone has to solve it. So the first thing was to find someone who can actually help me build it. So I'm not a full technical person. I'm not a developer by trade. I actually went to medical school. So completely different background.
Did you finish medical school?
I left in my last year to start my first company.
Yeah.
But I knew this was a big problem. I've talked to people who wanted this. So I met my founder, Derek, in 2019, December. Derek is a mathematician. He's the top 5 mathematical minds here in Canada. He was building a company called Coral, top line revenue financing company. And he was using accounting data to underwrite loans, which was quite interesting to see because he built the algorithms and machine learning models to clean the data set, to use it, and make a decision in 10 minutes. But that was completely opposite of what I was seeing at Intuit, or what I talked to people who were using Intuit data sets. This was like light years ahead of what everybody else was talking about on Hacker News and stuff like that. I talked to other companies in the space as well. They were all pass-through systems where they were just picking up data from Intuit and moving into a repository, which really wasn't solving the data fidelity problem. And Derek was actually doing it. He was actually focused on fidelity of the data set. So we started to talk about how this can be a much bigger problem to solve, and loans in small businesses are still taking off. Banks are not catering. That's why we've seen a lot of alternative lending companies. It's a big space. But an even bigger space is how do we enable hundreds of loan companies and thousands of cash management companies and product companies to build on top of this data set.
So he's working there. You meet him somehow. You guys meet in person. Do you start working together in person, or you just kick it off remotely? What was that early days like?
So we did meet in person. We used to meet in person at 180 John Street, which is a Spaces co-working space. Our office is also at 180 now.
Is that in Canada or Toronto?
It's in Toronto. It's in Toronto. Yeah. We would meet at coffee shops, audit spaces to discuss things around it. Things were a little bit complicated because he built the whole technology under Coral, and we were looking to take it out of Coral and spin it out into Railz. So there was that complexity, but Derek had already built most of the tech, like the underlying tech at Coral, and there was additional tech to be built on top of it. So it was all about talking about how big the problem is, what the idea could be. Data as a service is a big thing, and nobody was focusing on that. So we're focusing on data fidelity.
Did you end up spinning? Did you end up spinning any of the IP out of Coral, or just starting fresh from scratch?
We did spin the IP out of Coral, and Railz owns that IP today.
Got it. Was that complicated, that process? I'm just thinking about it today as I'm sure a lot of people are in a similar situation where they're at a company, they're building something, they want to transition the ownership structure, start anew. Oftentimes, it was a guy I was interviewing a few weeks ago. He was working at a bigger bank, and they had an idea to build a software product, and he started building it. Well, when you work on something while you're employed, the owner, the employer owns what you're working on. So they had to come up with a structure where he owned like 30, 40%. The parent company owned a big percent. Can you mention how that went down, or to the limit that you can talk about it, or what you learned from the experience?
There are a couple of ways to find a solution to this. It wasn't complicated, but the lawyers made it unnecessarily complicated.
Typical.
So I forgot what the article is. I think there's an Article 5 in Canadian taxation law that people can refer to. I'm not sure. It's a bit fuzzy, but I can refer back to it. So there are different taxation laws that you can refer to. So there are no tax complications. Then there are different IP laws that you can refer to. We do have an amazing IP lawyer who did the counsel on this. But there are a lot of different ways that you can do it. I've come across founders who have done that in the past, but I'm more than happy to share my experience one-on-one because each case is unique. There's no one size fits all.
Mm-hmm. Yeah, got it. Makes sense. So you guys are rolling. You're now a year and a half or 2 years into this business today. You've raised 15 million, which is pretty sizable round. Was that 2 rounds or 3 rounds? What was the process? I feel like that's a relatively fast, I mean, that absolutely is a fast on-ramp for capitalization of the company. Is that just opportunity of people you met and investors who are excited about the space, or did you have any regrets or learnings from the experience of raising so quickly?
Yeah, so
I could tell you, not to interrupt you, but I raised 23 million for the second company I started, and it was too much. We raised too much money. We should have raised maybe 12, 13. So the burns of raising too much money are, just different problems. And obviously not having enough money is a bigger problem, but I'm not implying that you guys raise too much, but it is I think bad advice that gets thrown around in the Valley or in tech where it's like raise as much as you can, because there are definitely downsides to doing that, especially if your space is hot. You know, if there's a lot of excitement around the space and investors want to get in regardless of the company. But yeah, go on.
You're absolutely right. You hit the nail on the top. We did have a lot more money on the table than what we closed. And we were, it's the third time I'm building and raising. So I was very cognizant of not raising more than what we absolutely need over the next 24 to 36 months max. There's different levers in raising capital. You're diluting more. And sometimes founders are super excited to have a very high valuation on their company as well. I've seen companies raise at a 40 million valuation coming out of YC with a proof of concept and nothing else and 2 people. Great, but I think there's limitations and there's shortcomings to that. If you value your company too high in the early rounds, then you also set yourself up for a very high goal to achieve. And if you're not able to do that, and a lot of things go wrong in startup, then they go right, and you do think fast and make changes to it really fast, which also means that achieving very high set goals is sometimes, they can fire back. So we're very cognizant of that. So we did 2 rounds of financing, seed and Series A, over the course of or the span of 8 months' time. But it was always around, what would it look like if we add another dollar to the mix? If we have access to $3 million, what can we do with that? The question was always around that versus, hey, we have $20 million on the table. Why don't we just go ahead and close it? We never had that thinking. So thinking was always around, how can we make this money increase the business that we're building today? And if the answer was, we don't need 5, we only need 1, then we go and raise 1. We don't need to raise 5. We don't need to unnecessarily dilute ourselves, especially when the space is hot, like you said.
How do you think about it? Because I imagine the vast majority of your cash will go to hiring engineers. What else? Maybe marketing. You don't have a physical office. So do you think about it as just burn rate on employees, software in particular?
I think about the growth of the company in 3 dimensions. The one is a new product, the second one is new channels, and the third one is new markets. So because we're not going to enter new markets, we're going to be focused on North American space, at least for the next couple of rounds. Then the question is new products and new channels. So how do you keep building new, better product, and what is required of that? And how do you keep tapping into new channels to grow your company, and what is required of that? And when you start to reverse engineer back and say, hey, for me to build, I don't know, X product, I'll need Y engineers, X data scientists, this much DevOps, and so on and so forth, you start to untangle that equation and start to get an understanding of that. So majority of the expenses around HR. So it's fairly linear for us to understand that. And because we are customer focused, customer obsessed, so it's really a feedback coming from who is using us and what is the use case that they're using. So how can we double down on that, or how can we make their lives better with new product offerings? That's how we think about it.
Yeah, I'm with you on the engineering side, speccing out the product and detailing what you're going to build in detail, and then estimating tickets and figuring out headcount. On the channel side, when you think about, I think of channels, tell me if this is incorrect, but channels is effectively marketing for new customer acquisition lines. I mean, a channel is a customer acquisition demographic or category, if that's right. So do you think about those as business development people, salespeople, online acquisition through Google, and are there other things you think about when you think about customer acquisition, or how you model that out conceptually?
Yeah. So new channels really is a new acquisition of customers. And there's a whole subset of the new acquisition. How does that happen? The second piece is, how do we get our message to people around us? How do people get to know about us? Even if they're not a buyer today, can they still get to know us because they're relevant in the industry and they can be a buyer down the road? So That brings into the mix of marketing and how do we market that, or who do we reach out to. That brings in being part of the conferences and stuff, the relevant spaces that we need to be there to get our name out. That's the second piece. And third piece is product strategic partnerships. Because we work very closely with accounting service providers and other data repositories, how do we have meaningful symbiotic partnerships with them? And also, how do we think outside of the space of partnerships, which is there's what meets the eye, which is right in front of you. Hey, these companies can be our partners. But then there are companies who are or can become our partners, but they're not obvious to us. How do we think about them and how do we outreach to them? So that's how we're thinking about channel and how we're moving across the board within channels.
I love it. Sounds smart. Well, congrats on all the progress there. If you're cool with it, I'd love to shift gears a little bit and ask you some other random questions.
Sure.
Tell me about Pakistan. So your family is from Pakistan. Did you grow up in Pakistan, or were you born? Are you Canadian citizen, U.S. citizen?
So
yeah.
So I'm born and raised in Pakistan.
Okay.
For the first 19 years of my life, and the next 19 years I've spent in Canada. So both countries are like very near and dear to me. But born and raised in Pakistan.
And what's your take on how Pakistan has changed with regard to tech and the openness, the culture, maybe the funding? Do you see an optimistic short or midterm perspective for Pakistani, maybe call it like people who are in tech or people who want to be in tech or their general tech scene? Because I know there's a incredibly smart group, I don't know what you call it, like culture of engineering and technology. But I haven't seen, and maybe it's just me, but I haven't seen a lot of tech companies come out of Pakistan for how many people I meet. I went to mechanical engineering in college, and the director of the engineering school was from Pakistan, and he was always the smartest guy I remember ever meeting. And he would always tell me about growing up in Pakistan. He'd always tell me about all these smart people. I'm curious. I've never been, but I'm curious what your take is on the landscape there today.
So Pakistan is a very unique country. And I think the introduction that the world got of Pakistan was post 9/11 through the media and the Bin Laden and the Taliban and the war. And that's very unfortunate for the country. And I think that's also what loomed over Pakistan for the next 15, 20 years, going all the way back to the early 2000s. And I think that's what held Pakistan back. That's one prime reason. The other prime reason is the corrupt government and the leaders who've been part of it, who just did not think about improving infrastructure or investing back into the economy and just creating more opportunities for entrepreneurs to excel. And that's one of the biggest reasons why you don't see companies coming out of Pakistan, but you see amazingly talented people in all sort of lives, across the globe, in all the big major tech companies or other companies across the globe, whether they're in education or other sectors. So Pakistan saw a massive brain drain during that time. People left for safety reasons. People left for new opportunities. There is still an element in Pakistan, and we can't turn our face from it, which is a radical element. And we see news coming out of the country. I think the last week or so, someone in Aircooled was lynched because of blasphemy. So the country still experiences or faces challenges from this cohort. Now, having said that, there are people who are more resilient than I am and who said that, hey, we're going to stay in Pakistan and we're going to still build it and we're going to still, contribute to the economy of the state. And kudos to them and, salute to them who actually stayed there and built that infrastructure. Recently, over the last 2 years, with the new Imran Khan government coming in and creating more opportunities, making more transparent government and reducing the corruption, there is a new level of confidence from entrepreneurs across the globe or Pakistanis or expats who want to go back. And now they have trust in the government that, this is not a corrupt government. We'll have the infrastructure to actually do and, support the country. So now we're seeing a reverse drain coming back into the country and building new companies. You have seen Klein and Perkins and Sequoia and other big funds are now looking at Pakistan very seriously. It's one of the largest populous nation on this planet, one of the highest adoption of smartphone, as well as access to internet. It's a highly digital, accessible country, but not having access to digital products. It's also one of the youngest companies on the planet, where average age is in the high 30s, which means that it's one of the best cohorts for any consumer company to target or any businesses to target, because there are almost 300 million people living in Pakistan. So it's one of the best places to build a company, in my opinion. It's still raw. It's still in embryonic stages. People who are brave enough to leave and move, I highly encourage them to do so if they have an opportunity to go and build. There are amazing entrepreneurs who left Silicon Valley and are now housed in Pakistan. Atif Awan, who was at LinkedIn before, runs Indus Valley Capital, and he's very active in the space, very bullish about the Pakistani market, as he should be. I think he's a good contact to have, as well as other Pakistani VCs as well. So if anyone in the network is looking to create and build a company in Pakistan, I'm more than happy to get them in touch with the right people and give them the support that I can, as much as I have access to.
Yeah.
But a great place to start a company. And I think you will see Pakistan as one of the emerging markets where you will see a lot more money being poured into it. And over the next 5 years, you will see unicorns being built out of Pakistan.
Yeah, I love that perspective. I think that their proximity to India is also likely to be a major contributor to their growth. I know India is really seeing a big uptick in the rate of young people in general who are using smartphones, the number of tech companies that are coming out of there, the investment going to that space. And I think just general proximity to India, being on the same time zone, you can work easily together. As long as you have basic infrastructure, as long as you have a relatively reasonable taxation structure, a relatively reasonable policing force, and you have access to the internet, like you can contribute, your country can contribute to the global economy in a big way. Not to say that those things are easy, but I don't. What you look like you're going to comment on that. Tell me.
I think it's easier said than done.
Yeah,
that's the first one. The second one is India is very similar and very different in the same way. Similar in the sense that same problems on the tech level, on the infrastructure level that India faced, Pakistan is facing now. What India faced probably 10 years ago. Different in a sense that India is politically more stable. They didn't see a war on terror over the last 10 years, which Pakistan is still wrapping up. There are tensions between India and Pakistan, which it's just beyond my my mind. Why, when the two nations can actually work together and prosper leaps and bounds, that we have to fight. It's just very unfortunate, and I see a world where. And I look forward to seeing a world where there's open border between India and Pakistan, and we're able to collaborate. And the comments that you made that hey, India is in close proximity, and there's a lot of similarities and there's a lot of learnings for Pakistan. The irony is you're absolutely right, but the problem is because of the political differences in the past, it's not possible to collaborate. There is still a political barrier. There's still a physical land barrier between the two nations. So it's just unfortunate.
Do you think a lot of this, in maybe even scoping out from Pakistan specifically, or the tensions, religion, how to make sense of the world from a existential standpoint, seems to be a lot of the tension that originates, or how should I say this? It's the story that we inherit, but in my little microcosm of people I've talked to and things I've read and watched, it doesn't seem to be it seems to be that there's a real opportunity for people to drop that story on the individual level, even though it's carried out on the political highest level for other reasons. Yeah, I don't know. I don't know if you sense that. Yeah.
I genuinely believe that there are no differences between the people. The people work together and collaborate together. And we see that here in Canada, or even as close proximity as Dubai, where Indians and Pakistanis come together and work together. Like, absolutely, there are no differences. We have the same culture. We speak the same language. We understand each other better. And if you talk about differences, Germany had the most differences with the rest of Europe. World War II, we've seen that. World War One, we've seen that. Japan and USA fought. We know the story of Pearl Harbor. They were able to put their differences behind and work together for the sake of progress. We now see Israel and UAE work together, and Saudi Arabia and Israel work together. Historically, they had their differences, but they're able to put them behind for the better progress and the betterment of their collective societies. I think that's what we need to understand. And we don't have big differences. It's just unfortunate that we're able to, bring up small differences and balloon them up into something which is completely prohibiting and preventing us to collaborate and build even a better, bigger society. It's a region of almost 1.5 billion people. It's a land of opportunities. It's a bigger land of opportunities than China, US, and Russia, and Brazil. It's a place where a lot of discoveries were made, a lot of inventions were made. Like India, that region gave a lot to the world, and not just spices.
Yeah.
So, we have a lot to build together, but we also have a lot to lose if we don't work together. And I hope the two nations understand that. I hope the leaders understand that, and we're able to put our differences behind and open up the border for betterment of the people on both sides.
Yeah, I agree. I absolutely agree. Tell me about your interest in air-cooled engines. I did a minor in college in aerospace engineering, so there was a few classes I took specifically designing airflow and engines. Not that I remember any of it now, but it was fascinating at the time. Are you a hobbyist in this domain?
I'm just a big fan of Porsches.
Yeah.
All the way till they stop shipping the air-cooled engine. It's just that the sound, it's just the raw mechanical aspect that's just so fascinating. And if you ever drive an air-cooled engine, it's just a very different experience. I've had the pleasure to drive the old Volkswagen. I don't know if you remember. It's a 3-cylinder air-cooled small engine. Even that's more fun to drive. So,
Do you have one of these bad boys?
yeah. Whenever I have a better cash flow, I think I have my eye out for a Gunther Werks Porsche.
A 3-cylinder? That's not 3-cylinder.
No,
Yeah.
not 3-cylinder. A proper 1972 air-cooled Porsche.
And what makes it? What's the appeal of the air cooled? Most cars are water cooled. Is that right? Or
Correct.
right?
Yeah. Like all cars are water cooled now. I think VW Porsche was well, Citroen also made air cooled engines back in the days, but they pioneered and made it mainstream. And it's just that there's no maintenance. I mean, like the new water cooled engines, you don't have to fill up the coolant every now and then, but air cooled is just so much more cooler.
Is it
The
louder
noise
or
is different.
Yeah.
It's a different noise. Similar to how, Harley Davidson and Ford has a patent on the noise, especially the F-150 noise.
I didn't know that.
Yeah, they have a patent on noise. How F-150 engine makes a noise through the exhaust, and Harley also has a patent on their noise. It's you sit in the car, you roll down the windows, no audio, no speakers, just you, the car, the gear, the clutch, and the road is just a phenomenal experience to drive.
Huh. And what do you think about electric? Are you going to get on board with electric, or practically yes, but from from entertainment standpoint, you'll always have the air-cooled engine?
I think air-cooled engine is more of a hobbyist
Yeah.
thing,
Yeah.
enthusiast thing. It's not a mainstream thing. Electric is the future. We cannot deny it. We have to embrace it. Being on the West Coast, I've seen wildfires firsthand where we were displaced when we moved here. Now we're getting affected by the floods, and the stem of that is our planet warming up. We need to invest in technologies which actually helps us lower the increasing temperatures. So we actually preserve the life and actually leave a planet for our kids where they can at least inhabit. So it's not a matter of if or when anymore. They're here. They're here to stay, and they're here to have mass adoption. So electric is the next thing.
Do you, how concerned are you with climate change? Do you feel like we're on the right path and you're optimistic about the trajectory and we got this? Or on the other end of the spectrum, within our lifetime, there's a very serious disturbance to everybody's life and it's just shitty all the way around in our lifetime? I guess that's the spectrum. Where do you fall in that?
I think we're not doing enough at all. The problem is we're not shit scared of it. It hasn't reached our backyards yet. It has only reached the backyards of certain people, in Indonesia and in Japan and on the West Coast in California where they see wildfires every now and then, and more storms and typhoons are hitting the coasts across US. But the Midwest and the East, they haven't seen the effects of the climate change. People are not shit scared yet.
Yeah.
I'm genuinely scared that we're absolutely not doing enough at all. We're doing it as a political shit. Seriously, I'm like, Trump pulled out of the climate accords. Biden put it like, that's the extent of seriousness that we have. And it wasn't just the Trump. Trump just didn't come in and say, I'm going to pull it out. Probably there's a team of advisors who are telling him and putting other interests first. So it's just unfortunate. There's not a lot of funding going into it. There are like a handful of investors who are doing it. Minded they are investing big, but we're not taking it seriously as a race, as a human race. And it's literally a question of our existence.
Yeah. Our existence, and also just quality of life sounds so benign, but quality of life is everything, right? Between, an absolute hell existence and a fantastic existence is the options we have. And I guess it's difficult. I haven't thought about this particular part of it too much, but I feel that the thing that gets people to really care is not just scaring them with documentaries that show the potential, terrible future, but acknowledging the full scope of, okay, what happens if we overspend? So we can give too much, we can issue too much cash, too many tax subsidies for people to buy Teslas, and then you have a bunch of people driving $100,000 electric cars. Whereas, was that an efficient use of money? Does that further drive wealth inequality? And so I feel if you have a total picture of saying, okay, we want to be smart, not spend too much on it too fast, because that introduces other problems like wealth inequality or an unstable socioeconomic system that makes it even harder for us to move forward. I feel like generally the emphasis should be on raising people's standard of living. There was I talked about this a few weeks ago, but I looked into it more, the more that people earn, the higher people's standard of living, the farther out they look. So if they're only making enough to provide themselves for the next couple of weeks or the next paycheck, that's all they're thinking about. But if they have enough stability, you guys, your employees, I'm sure are in a situation where they could think about and contribute, maybe invest in climate change companies. You're creating, companies effectively create stability in people's lives and economic prosperity on a micro level. And when people don't have that, then they can't participate. They can't care. I think that's what it boils down to. People can't care about the long term if they're feeling desperate and their urgent situation is in the short term.
You're absolutely right. If it doesn't affect anybody, they don't care about it. Simple as that. We've seen that during the pandemic. You have a lot of micro and macro examples. Just look at the buying spree patterns, the panic buying that happened, people buying masks and emptying out those shelves, people just buying plain on soap or toilet paper. The reason why people went for those shelves and emptied them out was because they were shit scared this is not going to be there tomorrow. And there's a virus coming who's going to shut everything down. And they started to move in that direction. But I say we're not shit scared. The thing is, we haven't realized it, that it is actually going to affect us or affect our kids, or immediately going to change the way we live and affect our quality of life. I've driven between Kelowna and BC, and I went through a town, Lytton. It's completely burnt down. You see houses burned, you see businesses completely gone, and they have the fence around it. That's when it hits you that this is real. And you ask the 5,000 odd people of that town, and they would do anything and everything. They would actually make the world move to do something about that damn wildfire, which is affecting them. But someone who's in New Jersey doesn't really care about it because they're not going to see that for next, 10, 15, 20 years. They don't need to spend a penny into it. They have no reason to do it. It's not in their backyard or going to affect their life. So from the people, the bottoms-up approach is a very difficult approach. When we lay the burden on people and say, hey, we need to do it, we need to make conscious choices, and we need to invest in X, Y, and Z, it is one of the hardest things to move unless everybody's life starts to get affected by it. The easier, the more manageable and more movable part is the policy change on the top level. And that's why it matters whether US becomes part of the climate change coalition or not. That's why it matters if US is putting more money into polar caps melting or not. That's where it matters when US has a mandate to lower its carbon emissions across the board by a certain percentage or not. These are small, easy fixes that we can do to slow the climate change while we come up with better long-term fixes. We need to buy more time as a human race by doing small fixes today, which are easier to implement and which are top bottom. While we work on newer, better technologies, and smarter people in the world will come up with new things to solve this change. I know entrepreneurs who are actually on it and are very passionate about it, who are doing it, but it will take time.
Yeah.
The things which will not take time is passing a damn bill in the Senate and realizing across all senators and congressmen that, we need it for ourselves more so we need it for our kids.
Yeah.
Yeah. So that's the challenge we're after.
Yeah. No, I love that. And even when you're not contributing directly to this cause, just talking about it and building a successful business that helps other people. Like, I'm sure if not one of your businesses today are a climate change related company, there's some accountant. So it's all interwebbed. It's all connected. You help some businesses be more efficient, and it's like, maybe you sell this company in 3 years, 5 years, and you say, well, the next business I'm going to do is in climate change, developing some nanotechnology, I don't know, whatever it is. But it's all connected, I believe. And I think the intelligence of us as a global community perfectly aligning with Web3 and everyone connecting on the internet sort of all in a very short period of time. It's like, it's amazing that this now with climate change is becoming such a urgent issue at the exact time that we as a species are capable of collectively communicating and building things to solve it. It's a hell of a story, you know?
Absolutely. And one comment that you made that, we might be touching companies which are building climate solutions. We actually are. There are companies on our platform today who are using and utilizing our data to help small businesses go carbon neutral today. How do they actually measure their own impact? How do they reduce their impact across the board? By understanding their footprint across different vendors that they're spending on or different products that they're bringing in. How do they set their goals and objectives across the organization to achieve? Where do they spend that money, and so on and so forth. So there are companies that are using the data because they have to connect back into the source systems to pull that data out so they can build better dashboards and help businesses decrease the cost or attract and retain talent in a certain area that they are particular about, which reduces their carbon footprint and so on and so forth. So the operational data definitely affects and touches multitudes of lives in different companies. So
Yeah.
I'm happy that we're able to make like a small dent in the world where we can actually help our planet to be better.
Yeah, you're like the guy down in the engine room of the boat. You just make everything work. The rails connecting all these tools together. It's kudos, hats off. I'm glad we got a chance to catch up and I learned what you're up to, and congrats on all the progress, man.
Thank you so much.
Any last piece of advice or way people can contact you? Certainly we'll have show notes with the company Twitter handle and website. But if there's are you active on social media?
I'm not. I'm one of those founders who's not on Twitter or Instagram. I have a very different opinion about it, but Railz is, and I try to broadcast it for the right audience. I don't have any advice to give because I'm too young in this world to give any advice to anybody at this point, but I have an ask that the work that we're doing at Railz is touching very different endpoints across different businesses and different industries and different domains, whether it's companies building climate change product or companies building better alternative loan products for small businesses or product companies trying to understand it. My ask is, if you do get to know about Railz, do let your peers know what they can use and build on top of us. And we're also making it insanely easy for anybody to come and start using us. It's completely free for you to start building on top of us till you connect 25 businesses across the board. So we want this to be out in the hands of as many builders as they can, because every new node in the network makes the system more efficient, creates applications which ultimately helps businesses or individuals whose livelihood depends on it, and ultimately will help us advance the whole race forward. So share it, let people know that there is a data set that exists that they can depend on, they can use, and there's no cost to start using it. That's my only ask.
Love it, man. All right. Well, thank you again, and we'll talk to you soon.
Thank you so much for having me.
Bye.